This is Scott Becker with the Becker Private Equity and Business Podcast. We try each day to sort of teach and entertain to make sure you're learning, that we're learning. Today, we're going to do a discussion of index funds versus individual stocks, a personal odyssey. So here's the deal. There are a handful of individual stocks that we have on our portfolio. We are largely invested in index funds and treasury bonds. And then we have a handful of individual stocks and a handful of other investments in private equity and venture capital funds. And I thought what would be worthwhile is to periodically look at where we have individual positions and how those have done year to date versus the S&P 500, where most of our index investing is in. And so I'm going to walk through this very quickly in terms of, what's a winner, what's a loser, and so forth. So to give a context for this, the S&P index as of today, and this is probably before today's, final results, is up 3.7% year to date. And with the S&P, you get low cost investing, you get access to the entire 500 different stocks, and you don't have to pick and choose which stocks you're investing in or make decisions as to when to buy or sell those stocks. You just get the whole basket of stocks. So that's up 3.7% year to date. And so I'll look at 6 of the stocks that we hold individually in our portfolio from sort of best to worst to give us the context versus that. So first, Amazon is up 6.77%. So if we just been an Amazon investor, we would be a winner. But of course, that's our biggest winner. Then I'll go to what's our biggest loser year to date, which is Astera Labs. Now, Astera Labs has had a great run for the last year, so I don't feel bad about that, but that's down about 5.7%. I'll go next. Our next winner, Microsoft, is a core holding. That's up 5.48%. We're pretty comfortable with Microsoft. They just seem to be extremely bright, like Amazon, like Apple, like some other companies have such ability to have size and scale and data analytics that what they do, they keep on making good decisions in general. So Microsoft is up, Amazon's up. The S&P 500, again, remember, 3.7% up. Amazon and Microsoft beat that. Astera Lab loses that. We're also a holder in Coca-Cola. And again, it's so embarrassing, but part of my explore strategy of investing in individual stocks is I don't do this as deeply thoughtful as I should. And so we've periodically followed Warren Buffett's thoughts and gone into Coca-Cola and Bank of America, which are 2 of his biggest holdings. So Coca-Cola is down about 0.5 percentage point year to date. Again, losing to both the S&P 500 and losing in general. The next stock, which is also in that same bucket but winning, is Bank of America. Also, it was traditionally a big Warren Buffett holding, not as much anymore, but up 4.8% year to date. Finally, the last stock, and again, it was up a good deal last year, but of course, since I bought it, it's not been up so much. Palantir is up 1.45% year to date. So when you look at this, a portfolio of 6 stocks, 3 of them, Amazon, Microsoft, and BofA, are doing better than the S&P 500 year to date. 3 of them, Palantir, Coca-Cola, and Astera Labs, are doing worse than the S&P year to date. Now, I'd have to actually go through in a much more detailed way my holdings and numbers to see what my actual return is, because I don't know that I'm overweighted, particularly in Amazon and Microsoft, though I might be. But it is fascinating to look at, the S&Ps versus your core portfolio, your core other holdings, and see what the difference is. When I look at this, of course, there would be no great reason for me to be investing in individual stocks unless I was going to carry a basket of individual stocks at 20, 30, 40. And there's a reason for that. So then people are able to periodically work their portfolio to take tax losses and do other types of things that really work for them. And there's all those strategies around that as well. But all things being equal, I would say that I'm probably doing no better or worse on the individual stocks than the S&P index. S&P index, I make a lot less choices, get a lot more exposure, and probably all things being equal, I'd probably stick to my core strategy of index funds and treasuries, and then a smaller part of the portfolio in individual stocks. Thank you for listening. Again, I just find it fascinating to review this stuff, to think about this stuff. I am certainly no great stock picker and probably belong more in the index fund category. Thank you for listening to the Becker Private Equity and Business Podcast.